Welcome to the Deep Dive. We're here to cut through the noise of earnings season, filter out the jargon, and really give you the core insights you need.
That's right. And today we're tackling Adobe's Q3 FY25 earnings call. Big one.
Huge. This is all about their massive pivot, isn't it? The whole AI monetization story.
Exactly. So our mission today is, go beyond the headline beat, which, spoiler, was definitely there, and really understand how Adobe is building its defenses, its moat in this new AI world.
We're looking for the proof points, the real signals behind the number.
Yeah, turning that investment thesis from just, a hopeful story into something more concrete.
Okay, let's start with the top line then. The results snapshot. You said it was a beat.
Oh, yeah. Textbook beat and raise, as they say, delivered a solid beat on earnings and revenue and bumped up their full year guidance.
Give us the key numbers.
Okay, so non-GAAP EPS came in at $5.31. The street was looking for $5.18. So a nice 13-cent beat there.
Pretty significant.
And revenue. Revenue hit $5.99 billion. That's up 11% year over year, also beating what analysts expected.
And importantly, the messaging from management seemed to land well this time.
It really did. They hammered home the product innovation, the AI traction, and it seemed to shift the narrative, away from the competitive worries and more towards, okay, maybe this growth is actually durable.
Right, because that's been the cloud hanging over the stock, hasn't it? The whole, is AI a threat or an opportunity question. A beat helps, but we need to see why they beat.
Exactly. A simple beat isn't enough when you've got that kind of narrative pressure. We need to look, under the hood. Did the different parts of the business back this up?
So the segment breakdown, did it show resilience?
Emphatically, yes. Digital media, that's your bread and butter. Creative Cloud, Document Cloud pulled in $4.46 billion. That's 12% year-over-year growth. Still the engine.
Still strong.
Yeah.
And digital experience, the marketing side.
DX brought in $1.48 billion, growing 9% year-over-year. Solid. But what really stood out to me was the forward visibility piece.
Okay, forward visibility. Crucial for software companies. What tells us they have confidence in future revenue?
Two key metrics here. First, digital media ARR, annualized recurring revenue. It exited the quarter at $18.59 billion. That's up almost 12% year over year. Shows the existing customer base value is growing.
Okay, ARR up. What's the second one?
RPO, remaining performance obligations. That stands at a whopping $20.44 billion.
Okay, hang on. Let's just quickly define RPO for everyone. Why is a $20 billion RPO number such a big deal?
Right. So RPO is basically revenue that's already been contracted but hasn't been recognized yet. It's like guaranteed future income locked in from existing deals.
So $20.44 billion is a huge backlog.
It's a massive security blanket. It signals real confidence from management, proves they're locking in long-term enterprise deals. And, add to that, they generated a record $2.2 billion in cash from operations just in Q3.
Wow.
Yeah, they're basically swimming in cash and future commitments.
And that confidence, presumably, is why they raised the full-year targets.
Directly. They lifted the FY25 revenue guide to between $23.65 and $23.70 billion. And non-GAAP EPS got a nice boost, too, now expected between $20.80 and $20.85.
They're not sandbagging anymore. They're projecting strength.
Exactly. Which leads us neatly into the core strategic story. AI monetization. It's not just coming. It's here.
This was the big question mark.
Right.
Can they actually get people to pay extra for Firefly and the AI features?
And the answer, based on these results, seems to be a definitive yes. The engine is on.
Okay, so hit me with the AI numbers. What do they disclose?
This is where it gets really interesting. Management confirmed that AI influenced ARR. So recurring revenue touched by AI products or features has now passed $5 billion.
$5 billion? Wait, what was it before?
They exited FY24 at $3.5 billion.
So that's a $1.5 billion jump in just 3 quarters.
It's a huge leap. And honestly, this might be the single most important number in the whole report.
Why? Because it proves the model works.
Exactly. It proves they've cracked the code or are cracking it on how to actually make money from enterprise AI. It's not just a cool feature. It's becoming integral to workflows and people are paying for it.
Okay, I need to push back slightly, though. AI influenced ARR. How much of that $5 billion is truly new money versus just, existing customers upgrading to Creative Cloud Pro because Firefly's in there?
That's the critical question, absolutely. And they gave us a clue with another metric, ARR, from AI-first products.
So stuff that only exists because of AI.
Right. Things like the standalone Firefly services, the Acrobat AI assistant subscriptions, Gen Studio for marketing. That bucket of ARR has already blown past their full year target. They were aiming for over $250 million for the whole year.
And they hit that already in Q3.
Yep. Smashed through it early. That signals really rapid adoption of the net new AI stuff. People are specifically signing up and paying for these AI capabilities.
Okay, that is strong evidence. And usage. Are people actually using these tools?
Oh, are they ever? Total generative AI usage hit 29 billion generations globally.
29 billion. That's an astronomical number.
It's massive. It basically means users are embedding this stuff deep into their daily work. That kind of usage scale is the moat right now. And get this, video generations specifically grew nearly 40% just from Q2 to Q3.
40% quarter over quarter in video AI. Wow. And it's not just the creative side. What about like Acrobat?
Strong there too. Acrobat AI assistant adoption is booming. 70% of the eligible Experience Cloud customers are using it, and the number of Acrobat AI assistant units grew over 40% quarter on quarter as well.
So the strategy is working. The whole trusted, integrated, commercially safe AI angle.
Absolutely paying dividends, especially in the enterprise. They dropped that stat. 99% of Fortune 100 companies are using Adobe AI tools.
99%.
And a key part of that is the choice they offer. They're not just forcing Firefly down everyone's throat. They're integrating Google's Gemini Flash 2.5, OpenAI's image models.
Yes.
All within Photoshop, Illustrator, etc.
So you use the tool you need, but you stay inside Adobe's world.
Precisely. Makes it almost impossible for big companies to rip and replace. And that integration is what pushes users towards the higher value Creative Cloud Pro subscription. AI becomes essential, not just optional.
Well, I saw that with Acrobat Studio too, right?
Yes.
Bundling the AI assistant with other tools.
Yeah, Acrobat Studio bundles the AI assistant and this thing called PDF spaces, which sounds cool, turns file collections into like knowledge hubs, bundles that with Express. Clear strategy. Use AI to lift the average revenue per user, whether you're a student or a Fortune 500 company.
Okay, so Creative Cloud AI is firing. What about the other side of the house? Digital experience, DX.
Right, the second engine. Can't forget DX. Subscription revenue there grew 11% year over year. Still very healthy. While creative gets the headlines, DX is key for that long-term enterprise story.
And any AI-related wins there?
Big ones. The Gen Studio solution, that's their integrated offering for the content supply chain, bundles Workfront, Frame.io, Firefly. That whole package now exceeds $1 billion in ARR.
$1 billion in ARR just for Gen Studio? What's the growth rate on that?
Over 25% year over year. It shows they're really dominating that marketing and content workflow space.
Okay, impressive.
And they're building defenses for the next shift, too. They talked about preparing for the LLM disruption, what they're calling GEO, Generative Engine Optimization.
GEO. Okay, this sounds important. Explain that.
Well, think about how people find information now. Increasingly, it's not just Google search. It's asking questions to chatbots, right? To LLMs like ChatGPT or Gemini.
Right. Discovery is changing.
Massively. Adobe's own digital index showed LLM traffic grew, wait for it, 4,700% year over year in July.
4,700%. Okay, that's transformative.
It fundamentally breaks the old SEO model. If people find your brand through an AI chat, how do you control how you appear? That's where the new LLM optimizer for Experience Manager comes in.
So it's like SEO, but for making sure AI chatbots represent your brand correctly.
Exactly. It helps brands shape their narrative within these LLM results, control how they're described, what products are recommended. If you want the AI to talk about you accurately, you need something like this. It's a potential game changer for the DX side, a huge moat.
Okay, so let's put it all together. Double-digit growth overall, clear EPS beat, raised guidance, hard evidence of AI monetization way ahead of schedule, both in creative and DX, a new strategic defense being built with GEO. Execution looks, frankly, flawless.
Pretty much, yeah.
So why on earth is the stock still down around 21% year to date, even after the pop post earnings? What gives?
That's the million-dollar question, isn't it? It's that divergence. The fundamentals are clearly accelerating, but the narrative around competitive AI risk is sticky. The market is still spooked, even though Adobe is proving them wrong quarter after quarter.
So the stock price is lagging the reality of the business performance.
That's how I see it. The Q3 results show they're moving from being at risk from AI to actually leveraging AI for growth and profit. But the perception hasn't fully caught up. The stock's valuation reflects the fear, not the execution.
Which means the next big catalyst is probably Adobe Max, their big conference.
Exactly. October 28th. That's the next major stage for them to reset the narrative, showcase the roadmap, and hopefully convince the holdouts during the investor Q&A.
Which naturally brings us to
Our favorite segment. This is not financial advice.
absolutely not financial advice. But given this disconnect, strong fundamentals, lagging stock price, upcoming catalyst, there's maybe an interesting, if speculative, play here.
A plausible yet outrageous trade idea, perhaps. Look, the thesis is simple. The competitive fears are overblown and suppressing the stock's value. Manex is the stage to prove it.
So the idea is bet on a narrative shift at MEDX.
Precisely. We're thinking a tactical long call spread focused specifically on that event window.
Oh, wait, break that down. How would that work?
You'd buy Adobe call options that expire shortly after the Max conference, say late October, early November expiry. Then, to lower the cost, you'd simultaneously sell calls with a higher strike price for the same expiration. Creates a defined risk-reward bet.
So it's an aggressive bet that the Max presentations showing off Creative Cloud Pro adoption, enterprise AI wins, maybe the LLM optimizer will be so compelling that it forces a re-rating of the stock.
Exactly. It's betting that management absolutely nails the Max presentation, confirms the $5 billion AI ARR isn't a fluke but the start of a trend, and causes a sharp rally that breaks through recent resistance levels. It leverages the current depressed valuation for potential upside.
High risk, potentially high reward, totally dependent on that Max event landing perfectly.
You got it. Plausible, but definitely outrageous.
Okay, let's wrap this up then. Quick recap. Adobe's Q3. Really a masterclass. Strong growth, beat EPS estimates handily, raised the outlook.
And critically, showed massive momentum in AI monetization. That AI-first ARR target being hit early is a huge proof point. They are turning the AI fear into actual dollars, recurring dollars.
So for you listening, the key things to watch are Q4 execution. Can they keep this momentum going? And definitely keep an eye on the news coming out of Adobe Max at the end of October.
Yeah, that's where we'll see if this AI-enhanced workflow migration story really solidifies. If they maintain this trajectory, that competitive overhang, well, just can't last forever against these kinds of numbers.
All right, that's our deep dive for today. Remember, this discussion was purely for informational purposes.
Definitely not investment advice. Do your own research.
Thanks for tuning in. Happy analyzing.